What's up, guys? It's Rob here, and today we're going to be talking about what the heck is going on in the stock market because we have just been moving down and down and down. It's gotten so red that we're actually headed for the worst month since 2008 in the NASDAQ. It's kind of crazy stuff. A lot of people are wondering, are we headed towards recession? So that's what we're going to talk about in today's video, all right? You can see right here a map of the market and just see how red everything is. And you can actually also see what's causing it, right? Amazon down 13.67% on the day due to horrible earnings, right? So Amazon is what's really causing a lot of these fears right now. Amazon had a pretty bad earnings call, probably the worst earnings call in 7 years. We're going to look at it. It's really crazy what went on there. And a lot of people are worried about a recession because of it. So we're first off going to look at this headline right here. NASDAQ slides 2% led by Amazon as benchmark heads for worst month since 2008. And things aren't looking too good for the overall market, right? You can see that pretty much since January, it's not been looking too good. We thought we were coming back a couple of weeks ago, but the past 4 weeks have just been horrible for the market. We've just been moving down and down. And especially Amazon has actually been moving down as of late, right? You can see a massive plummet right here. And today alone, you can see a lot of that was caused by today and the horrible earnings, the actual negative earnings. Okay, Amazon reported a loss instead of a profit, the first time in over 7 years that has happened. So really horrible stuff. In fact, if you look at the max chart for Amazon, you can see this earnings call right here is a negative, minus 7.56. And all the other earnings calls are positive all the way back until 2015. You have to go all the way back until 2015 to find Amazon's last negative earnings call right there, minus 12 cents per share. And they just lost $7 per share. Okay, so in the Amazon earnings call, they lost 756. Analysts were expecting they'd make 840 per share. And what ended up happening is they attributed this loss to a loss from their investment in Rivian Automotive, RIVN. A lot of you guys might have heard of this stock, Rivian. It's an EV company. Amazon invested in them pre-IPO when this thing was over $100 per share it IPO'd at, and now it's down to 29 bucks. So absolutely horrible performance on this stock. It's an EV company. Maybe it'll come back, but they've not been doing too good up until this point, right? They skyrocketed the week after IPO up to 179 and then just plummeted. Now they're below 30 bucks per share. It's really horrible stuff. What happened to Rivian? So that's what they're attributing this loss to. They actually did manage to increase their revenues, right? Their revenue increased 7%, but this was not as much as analysts were expecting. Analysts were expecting a 44% increase, Amazon had gotten a 44% increase the same period last year. So this was actually the company's slowest growth rate in 2 decades. And Amazon being one of the biggest companies, it's a pretty important indicator for what's going on with the market, right? When Amazon starts tanking, the biggest e-commerce company out there, probably the biggest retailer out there at all, this is not good for the market, right? When Amazon starts tanking and when their growth really starts slowing down. Now, they actually explained why, right? They said, the CEO said, the pandemic and subsequent war in Ukraine has brought unusual growth. So the pandemic brought unusual growth, but then he also continues and says, and challenges. And that's what's coming from the war in Ukraine for Amazon, right? That's what's really causing Amazon and the entire stock market to suffer quite a bit, all right? It's a lot of oil pressures, right? Amazon actually earlier this month announced they'll be charging sellers a 5% fuel and inflation surcharge for the first time in history beginning April 28th, all right? This is hopefully going to buoy their revenue, but this is not going to be good for sellers either, right? And when you look at the price of oil, you can understand why they have to do this. Oil has been skyrocketing the past couple of months. Ever since 2022 started, it's up massively. It's up almost 30% since 2022 started. And inflation as well. Inflation has been very rough. And the inflation isn't just hitting Amazon's revenue, it's hitting the seller's revenue, and it's hitting the people who are buying stuff at Amazon, right? Those people are not able to buy as many goods because the money just doesn't stretch as far, right? They've got to spend a lot more to get the goods that they want. And so people are really worried not just about Amazon, they're worried about the entire market, right? They think that the entire market could be in for a bad time due to all of these pressures. Now, what's important to note is that a lot of these pressures, obviously, are caused by the government's printing of money, right? We've seen so much money get printed over the past couple of years that it has caused big upticks in inflation. A lot of the recent pressures, right? The oil spike that we actually saw, while oil was already on the rise, we did see a massive spike due to the war in Ukraine and the lack of demand for Russian oil out there, right? So the lack of supply of Russian oil due to people self-sanctioning and some governments choosing to completely ban Russian oil, the US being one of them. We've seen massive hits to the oil supply, big inflation in terms of not just oil, but in terms of prices as well, because oil is used to transport products, right? It's used to transport products, it's used to make products, it's used to generate energy. And when that gets expensive, that just causes products in general to get expensive. And that's why you can see Amazon is actually charging sellers at this point a fuel and inflation surcharge. So, really crazy stuff, right? And people are worried that the markets are going to be crashing in a big way. Now, when I see headlines like NASDAQ headed for its worst month since 2008, that actually does not entice me to sell, right? I'm not enticed to sell. I'm more so inclined to be buying when I see worst month since 2008 on this thing, or at least we're heading towards the worst month. We're not actually there yet. And this is a chart of the S&P, not the NASDAQ. I'll just point that out. But if you actually look at what 2008 was, you can see 2008, horrible year for the stock market, right? Obviously, people would have preferred to have sat that out if they could. But when we're already in what's possibly going to be the worst month since then, that actually was not the prime time to be selling, right? If you look at when 2008 was really hitting people hard, that was not the prime time to be selling because, sure, you miss out on a couple more months of losses and then massive gains for years and years, right? That's the situation we looked at. We've moved down somewhat dramatically in the S&P, not too dramatically from the highs. We're only down at this point about 12.8%, but there's no guarantee that this is going to be as bad as 2008. And what I like to do in situations like this, instead of just speculating, is look at what are the world's wealthiest people doing, right? What are Elon Musk, now Bernard Arnault and family, right? He's number 2 for the world's wealthiest people now because Jeff Bezos just took an $18 billion hit on the day because of how much Amazon has dropped, right? You can look at these people, and if you look at all of them, none of them are just sitting on a ton of cash. Pretty much none of them. I mean, you could have to go through probably the top 100 people to find someone who's just sitting on a ton of cash and who isn't somewhat invested or pretty well invested in the market to one extent or another, right? Jeff Bezos, you can tell he's almost fully invested in the market because his net worth is down 11% because Amazon is down 13%. It's almost perfectly mirroring what's going on with Amazon. When Amazon drops 13%, Jeff Bezos' net worth drops 11%. So he's not very much in cash or other investments, right? He's mostly in Amazon. A lot of the world's richest people are still very invested. And I think it's a big trick, unfortunately, that a lot of people in retail fall for. A lot of retail people fall for it. When they see the market moving down, they like to sell, right? They sell their stocks and they hold cash. And I tend to think that's a mistake, right? That's not financial advice. That's just my opinion. I tend to think it's a big mistake to be selling out of stocks when you see them moving down, especially when you're already getting headlines like heading for the worst month since 2008. I think it's a big mistake to be selling. And that ends up not being the case for the world's wealthiest, right? The world's wealthiest tend to not be selling all that much. Ever really, right? They tend, I mean, if they need to buy something like Elon Musk, he just sold some Tesla because he wanted to buy Twitter, but they tend to not just be selling willy-nilly because they see stuff dropping. They actually realize that's a good time to be buying. And you have to ask yourself, when you're selling a stock, what are you selling it into? A lot of the time, pretty much all the time, you're just selling it into cash. And the last thing that I want to be holding right now, guys, is cash. Look at the purchasing power of $1 in the US every year. You can see how dramatically it's fallen. Since the 1700s, it's just been down and down and down. And the last meaningful rise that we actually had in the value of the dollar ended in 1933. All right, that was the last time the dollar was significantly gaining value. Since then, it's just been down and down and down. And with all the money that the government has printed, the dollar is the last thing that I want to be selling my stocks and assets to start holding, right? So a lot of people will be fear-mongering out there. A lot of people are going to be talking about recessions and the need to sell, and it's time to get out of this market because it's all going down. But at the end of the day, maybe it goes down for a couple of months, maybe it goes down for a year, but over the long term, if you're in this game for the long term, I mean, the charts really speak for themselves. You can see where the dollar is going. It's going down. You can see where the stock market and indexes overall tend to be going. It tends to be going up pretty dramatically. Sure, there's some volatility in there, but I would much rather be in a volatile asset when if you look at the all-time chart for the S&P, sure, there's some volatility where it moves down for a couple of years or months at a time, but overall, it moves up pretty dramatically. And then when you look at the dollar, it's just down and down and down. Maybe it moves up every now and then, every 100 years, it might move up a little bit. But that's not a bet that I want to take, especially when we've printed this much money as of late, right? So that's just my opinion, not financial advice. If you appreciate the video, feel free to subscribe to the channel. And other than that, guys, have a great day. I'll see you in the next one. Bye.